Do you ever worry that you might be a little boring? You're sitting across from a client, you're explaining something important, markets and risk and retirement, and you can almost see it happening. Their eyes are glazing over. They're nodding politely, and you're thinking to yourself, gosh, how do I get this to land? Being credible isn't the problem in our industry, but being memorable is. Today's guest is Jesse Hurst, CEO of Impel Wealth Management. He's a top financial advisor who has cracked the code on how to blend pop culture with finance for a very memorable client experience. If you want to be more yourself, more entertaining, and more impactful, this episode is for you. Well, welcome, Jesse, to the podcast. I'm delighted you're here.
Thank you so much. Looking forward to our conversation.
People really struggle with, the client's eyes just sort of glazing over. It sounds like you probably recognized that in some form or fashion when you were younger and you were like, okay, I want them to get it. I want them to really understand what we're talking about. Did you ever worry that it was like going to harm your credibility at all?
Not as much as my wife did.
Interesting.
So I can't remember from our first conversation whether I shared with you, but when we started that firm in 1997, my two partners were 46 and 48, and I was 31 at the time. I was the kid, right? So by the time we got to 2016, 2017, they were retiring out. And then I took my team, my clients, and formed Impel Wealth Management, my firm today. And then in 2020, when COVID hit, you couldn't be face to face with people, right? 2 weeks to bend the curve, and then you couldn't see clients for months. And so I doubled down and started writing 2 a week just to kind of try to fill the gap between what they were hearing out there in the news and noise of the media and us not being able to be face to face with them as much as we had been. And in March of 2020, at the very end of that month, the government passed the CARES Act, which was all the stimulus checks and enhanced unemployment and PPP loans and all that. And at the same time, the Federal Reserve Bank dropped interest rates to zero and opened the floodgates of liquidity. And Jay Powell, the Federal Reserve Bank chairman, and Steve Mnuchin, the Treasury Secretary at the time, did a joint press conference. And they said, this is not a conventional recession. It's an unconventional economic catastrophe, and we're going to have to fight it with unconventional weapons. And the first thing that popped into my head was the scene in Animal House where Otter says to the frat brothers after they've been kicked out off campus, he goes, now we could fight them with conventional weapons, but that could take years and cost millions of lives. And so I wrote a blog post comparing the actions of the Federal Reserve Bank and the federal government to the frat brothers. And my wife thought I was crazy because she edits everything I write. She's like, are you sure you want to do this? Not everybody will.
This feels a little out there.
No, it's funny. Trust me. And people loved it. Right. So last fall, I had written a blog post about how international stocks had outperformed U.S. stocks by a wide margin for the first time in years and years and years. And I used the Led Zeppelin song, Rock and Roll. It's been a long time, been a long, lonely, lonely time, right?
Mm-hmm.
So the next week I have one of my retired clients. She's a 73-year-old retired school teacher walk into my office. She goes, I sung Led Zeppelin songs around my house all week last week because of your blog post. I'm like, perfect, right?
Mm-hmm.
That's what you want, is that it made it relatable and fun. And some 73-year-old lady sang Led Zeppelin songs because she read an economic blog post of mine, right?
How wild. That's awesome.
Yeah.
I mean, you brought such joy to her in those moments. And then, she got to have a completely different experience working that through. That's amazing.
Yeah.
Why do you think that pop culture, why do you think this approach is working so well? Is it the humor in it? Is it the music? Why does it work?
It's funny. I think it's both. I think there's almost always some humor to what I do with it, right? Because I think the last thing the world needs is another dry, boring, numbers, charts-based economic blog, right? There's plenty of those out there if somebody wants to read them. But I think the humor is part of it. And then I almost always include a YouTube link to either the scene I'm talking about or the song I'm talking about. And my wife and I Rochelle and I were having dinner with a couple last year who are just maybe a year or two older than us, and they were both retiring. So we took them to dinner, and he does most of their oversees their finances and stuff. And she comes to like every second or third meeting, mostly because he drags her or whatever. And I said something about a blog post that I had written, and she said, "I love that blog post. It was funny." And he looked at her and he goes, "You read what Jesse writes?" And she goes, because she doesn't pay that much attention to the finance. She goes, "I can't wait every week to click the YouTube link to see what the song or the video is that he tied his blog post." And I'm like, hey, look, if somebody who hates finances and doesn't pay attention reads and clicks through because of that, I'm good, right?
Yeah. Yeah. That's super special. I mean, then you've engaged her in a way that like worked for her. You've created this memory of it. And you've also been able to create this relationship with her that is so much deeper just because you're sending those out. Like she will trust you so much more because she's had this like content from you along the way.
Yep. So yeah, so I have a lot of fun with them. I wrote one here just recently. I don't know if you saw this, but in late last year, the Treasury Department announced that they were going to stop making pennies, right? And because it costs like 3.4 cents to create a
Make
1 cent
penny,
penny, right?
Yeah.
And so I used the Beatles song Penny Lane to say, hey, what are your memories of pennies as a kid? And tell me stories about, and people wrote in and told us about their piggy banks and their paper routes and what they remember about pennies and so forth. And the interesting thing is my son, who was the touring Broadway actor, he was a trumpet player in marching band in high school. Well, I announced for the marching band, and during their senior year, they had a Beatles halftime show, and he got to play the trumpet solo in Penny Lane. So you tell the story and people ask about it, and it's just fine. It's just, it's connection points with people that make you real. Like people will read that and they go, oh, that sounds just like something Jesse would say.
Yeah.
It kind of makes you a real person to them.
So that's super interesting because you said, okay, it sounds like something Jesse would say. So there's this true, authentic element to it, right? Like you're just bringing in all these facets of yourself into the conversation. I think a lot of people are really afraid to do that. They're afraid to be too authentic. They're afraid they're going to lose credibility. How did you decide to not be afraid?
Well, what I've noticed over the years, that's actually a great question. One of the things I noticed years ago, like I said, I've done this 38 years now. I noticed probably 15, 20 years ago was kind of around the time it started kind of crystallizing in my head that right now I oversee about 140 client families. I oversee about $400 million of investment assets. If you told me that Rochelle and I had to go to dinner and spend an evening with any one of those 140 clients, there's probably 137 of them that I go, great, love them. They are fun people. Rochelle and I'll have a ball with them. There's probably 3 where you kind of go, really? But that's a pretty good batting average.
We won't tell who those are.
Yeah, well, they probably know. But you sit there and you go, people tend to resonate and draw to people that they connect with, right?
Yeah.
So if you're drawing people who come to you because of who you are, what your process is, what your personality is, what your communication style is, why not let that shine? Because that's part of why they came to begin with, right? Mm-hmm. They wanted that authentic, they came to you because of that authentic voice. And that's part of why I love writing in general is I see, and I'm going to pick on marketing teams from various broker dealers, including my own, right? We have a marketing team at Cetera called Marketing Central, and I love the people who run it. They are some of my very good friends, and they're very good at what they do. But it's very funny that you can tell when they drop a new post, because I can go to LinkedIn and I can see 7 or 8 different advisors from Cetera who all dropped the same post within 2 days of each other. And I go, man, I hope I'm never in that spot, right? I think people come to us because they want to know what we think. They don't want to know what Marketing Central thinks.
Yeah.
they come to us for our authentic voice and for leadership, right? And that's what we try to provide.
Do you keep it pretty consistent? Like, do you have a formula that you're sort of following for your content? And so that you're saying, hey, this is my voice and this is how I want it to be? Or do you just kind of write and blend this in super organically and naturally because it's just you?
It's a little bit of both. So as I read, right, and I read a lot, right. I actually just did a blog post on the importance of reading, just because statistics show how few young people read anymore.
I saw that one. Yeah.
And it was based on Charlie Munger, who was Warren Buffett's partner, and how much time the two of them spend reading. And so I generally read 600 to 800 pages a month of economic and political commentary, just because I like staying current with things. So writing helps me assimilate my thought process around what I've read. So I always, and this is going to sound crazy, but I always have a stack of stuff where I look at it and go, like, literally this stack here are articles and charts and different studies that I've seen that I go, man, that would be a great article. That would be something made about, right? And then usually it's pretty easy for me to pick up the social media hook in it. So I usually start with the social media. If I think about, a blog post that I've written, right? One that comes to mind, you remember last April, when we were going through the trade tariff downturn, right? Stock market from February 19th to April 8th dropped 20% intraday. Closing basis, it was just a little less than that. But people were panicked, right?
Right.
And so you mentioned it earlier, right? If I started in the business in August of 87 and 6-7 weeks later, the stock market crash of 87 comes, and then there's been two Persian Gulf Wars, .com, 9/11, Run, WorldCom, AIG, Lehman Brothers, fiscal cliff, COVID, whatever, Russia, Ukraine, and all of that. Every time one of those events happens, the media screams, right? The stock market pulls back, maybe the economy slows and the media screams, and people want to panic. So I wrote a blog post at that time using the REM song, and I called the blog post, "It's Not the End of the World as We Know It," right? And so I took a chart and showed all the crises from 1987 when I started forward, and chart that against the trajectory of the market. And you go, like, we've been here before. This is okay, right? And you have to have a strategy to make sure you have, especially for your retired clients that are drawing income, right? You have to have a strategy for being able to create and manage liquidity and income needs during that time period. But, if you can do that, so I talked about the song, the REM song, tied it to, if you've paid any attention to the political commentary in the markets over the last 60 days, you might think the end of the world is coming again. But it's, as I reflected over all of these events that have happened over the last 35 years, it's not the first time we've been told that. And guess what? Every time we were told that, the end of the world was once again delayed, right? Like it didn't happen. If you panic and follow when everybody else does, you'll get the results that everybody else has. And if the masses were wealthy, if the masses were right, the masses would be wealthy. By and large, the masses are not wealthy. So let's maybe think about an alternative thought process and alternative actions.
One of the things we talk about in the industry all the time is that there's this organic growth problem, right? And so people are looking for tools and, finnies and, smart referral systems all over the place, right? To try to figure out how to grow organically. But you've sort of developed an approach and you're acting on that approach.
Yeah. So it's interesting because in our world, I'm a big believer that most people don't wake up one day at 43 years old or 52 years old and go, geez, I should probably get a financial planner, right? There is usually some triggering event that causes them to say that, right? I'm getting an inheritance, I'm having a child or a grandchild, or, I got an early retirement buyout, or I received an inheritance, and all of a sudden I have something that I don't know about and I need to find somebody to talk to. It's interesting how many of these come in kind of hybrid, where somebody says, I talked with a friend or, somebody who's a colleague that I have confidence in, and they gave me your name. And when they gave me your name, I knew who you were because I'd see your social media posts, right?
Yeah.
So it's not that they came strictly from the social media post, but the social media post gave us kind of top of mind awareness to them. When that triggering event happened, and somebody gave them our name as a referral, they're like, oh, I know those guys, right? Like we had somebody who was referred into us just 2 weeks ago, and I didn't even know she did this, right? She was sitting in our office meeting with me and one of the other certified financial planners. And I thought she was looking at her iPhone, right? And apparently she was doing this and she took a picture of being in our office. She took like a selfie of herself in the office and she posted it to Facebook and said, hey, I'm doing the adult thing. I went and met with the financial planners of Impel Wealth Management today. And it was funny because 4 of our clients that we didn't even know knew her saw the post and all said amazing things about us. And then it got out to other places. And I had no idea because I'm not actually, I'm very rarely on Facebook. I'm on LinkedIn and YouTube.
One of the things I'm thinking about too, going back to your writing and how much you do with your blog, et cetera, you're very consistent about it. Do you think some of your success or how much of your success is from like the consistency of it versus the sort of charisma of it?
Yeah, that's another really good question. And I think it's probably some of both. I think, first of all, it's fun and people like reading them. But I think on top of that, they come to expect that once or twice a week, they're going to hear something from. So there's this expectation and you get the click-through rates are much higher than my understanding from my marketing PR firm is that our click-through rates are, several times industry averages and so forth. So, when you get emails, most blog posts that I send out, I'll get 3 to 5 to 7 messages from clients who either related a memory or said, hey, I really love that. This morning I literally got a message. From a client this morning that said, very informative weekly newsletter, love the information on AI and new innovation, went to a website you suggested, and thanks for taking your time to give us weekly newsletters in order to keep us informed, right? Like that literally just came this morning from a client. And when you get that and you get that kind of reinforcement and people are getting value from it, here's one of the other things that I think is really interesting is we live in a world where demand for our clients' services is inversely relational or proportional to how well the markets are doing, right? When the markets are up a bunch, everybody's good. I looked at my accounts, I feel good. I'm not going to bother Jesse with something or whatever. But right, you go through, you think about where things were in October of 22 or March, April of 20 after COVID. You think about 22 when Russia invaded Ukraine and the Fed started raising interest rates and the stock market dropped 26% between January 3rd and October 12th. And, during those times when markets are down the most and things are most volatile, you're making less money because you get paid based on assets under management, right? But it's when you need your team and your staff the most, you can't cut expenses because you got to service the heck out of people at that point. Right. But what I've found is between our monthly investment committee notes that go out to our clients every month so they know what our investment committee is doing, what trades we're making, what our thoughts are around the economy and the markets and their portfolios, along with the blog post, I find that it cuts our call volume dramatically because people go, oh, they're on top of it. They know what's going on. They keep in touch with us all the time. So we're not getting the panicky phone calls from somebody like we normally.
Well, and you've created a relationship already through those written words, right? Like they're used to seeing that. They already are trusting it and they trust you. It's also not that you're sending a blast email that's like out of sync or out of the norm, right? That actually might even like raise the client's anxiety. Like your blast emails are a regularly occurring thing that clients are used to and look forward to. And so it's a natural place for them to get reassured.
Yeah. Can I give you a funny story from so April 7th, 8th last year, the market kind of hit the bottom after the Liberation Day trade tariff stuff.
Yeah.
So I'd written this blog post about the history of the markets and kind of volatility events and how markets, this was something I was told when I was brand new in the business in 1987. They said, my first sales manager said, if you look at a 60-year chart of the stock market, it looks like a man walking up a hill bouncing a yo-yo, right? He goes, the short-term events are like the yo-yo and the long-term is where the market goes, and you got to pay attention to the hill, not the yo-yo, right? And so I kind of used something like that. And I said, from my 38 years in doing this, or 37 years at the time, I said, the market's done this, but we've had all of these events. But I used the Joe Walsh song, Life's Been Good. Life's been good to me so far, right? And we published it and we had scheduled this in advance because I knew I was traveling. It went out on April 7th and it was called Life's Been Good for Stocks. And then it came out the day the market bottomed in that trade tariff. And so I got a couple of emails from clients going, well, things don't look good for the stock market now. And I'm like, guys, you're missing the point. This was exactly the point
Right.
Yes, there are these volatility events and there have been 22 of them in the last 37 years, but the market's still done this over time. So I had to have a couple of conversations with clients, and these were also clients that hated Trump anyway. So it was, that kind of just gave them fodder for what was going on.
For their viewpoint. Yeah, for sure.
Yeah.
It's fascinating how you also have brought in so much data. So you're a writer and a creative, you bring in the data, you make it kind of fun, and people are getting it. And so we're not getting that glazed over look. I want to also zoom into something very specific that you did, which was your book. There are so many advisors who think about writing a book, so many advisors who start a book but don't quite finish it. What was the process like of writing Poponomics?
Yeah, so I wrote the book, right? And if you take a look, I just happen to have a copy here, right? If you take a look at the cover of it, you see there's all these puzzle pieces on the front of it. And I wrote the book about the 12 chapters in the book are the 12 puzzle pieces that you need to put together to create your unique retirement success story. And writing the book was actually kind of fun. I had a writing coach. I mean, I'm not a ghostwriter, but the publishing company that I worked with, I would develop a chapter at a time and submit it to them. And we talk about transitions from stories or chapters to the next chapter and so forth. It took about 9 months to write the book. It took almost that long to go through 4 rounds of editing, which just find a sharp object or a tall building. Like I can't stand it. It is like, if it wasn't for my wife, Rochelle, I never would have gotten through it. Right. I mean, I had good publishing company and good people to work with, but that part's, I'm just not that minute detail, should this be a comma here or should this be a semicolon? It's like, I had a big thought there. Just pay attention to what I wrote, right? It's funny because people would say, what was your favorite part of this? And it'd be like, well, since I wrote that book, I've written 100 blog posts. There's been like so much cool stuff I've done since then, right? But my marketing PR person asked me, to come up with a visual for why I wrote the book, when I've written blog posts for all these years. And I pulled out a 45 record, right? Like, you remember the old little 45? Said the 45 is your blog post, right? It's a story. Yeah. It's a point in time. It's just a moment, right? And then I pulled out the album that 45 came from, and the album is the story, right? That's the book. It's the start to finish. And it allows you to take somebody from how do I determine where I am to what are the things I need to think about to aspire to a successful transition from work life to retirement life, to what are the steps I have to take to make that a reality and walk people through that. You can't do that in a blog post, right?
Now, what advice do you have for an advisor who wants to write a book, right? Like what's something that they maybe misunderstand or something that you would absolutely recommend they do if they want to go out and write a book?
Unless they have a really strong idea that they think they can push through on their own, I would find a publishing company or a book writing coach to help you get through, just to hold you accountable, to help you with structure and timeline, and to especially help you with the editing process. Like I said, because I mean, like I said, there were 4 rounds of edits, right? So one of them was just the content edit. Does the story flow? Does this story flow to this story okay? And is the transition okay within this chapter? And then from chapter to chapter and so forth. Then you get into things like the grammar edit and so forth, which was just long and painstaking and brutal. But then it's all the bibliography stuff. It's all the citations, right? Because when you write a book about finances and here's something that I found that was...
And you're a data person. You were probably referring to lots of data that was out there.
Lots of charts and graphs and so forth in the book. Now, here's something that's really interesting. And I'm so thankful for my wife, Rochelle, on this, is if I had a chart from BlackRock or the American funds or whatever, you'd have to go get permission from them to use that chart, right? And they all want to charge you a fee and it could take forever and so forth. But if you know the data sources for it, you could go to the data sources and she could go to ChatGPT and create the chart and she owned it, right? So we could use that and that solved a bunch. But I mean, I still think when I looked at it last, I think there were 265 citations in the book. Something like that. There's like 260 citations in the book that you just want to make sure you're staying legal with and so forth. So like, if you're not really up on that, it's really hard to get that across the finish line on your own if you don't know what you're...
Yeah, that makes sense. I want to bring it all together for our listeners. So, a lot of our listeners are advisors who are thinking about going independent. They're advisors who are in growth mode, thinking about adding advisors to their practice, et cetera. They are trying to do something different, trying to live a life that's a little bit off script. How have all of these things kind of come together for you to create the growth in your practice?
I think one of the things is find what you're good at, right? You remember the name Ron Carson from Carson, right?
Yeah,
I started
absolutely.
in the Ron Carson coaching program in 2002. And one of the things Ron used to say is, he said, a lot of people will tell you to work on your weaknesses. And he goes, I don't understand why you'd want to have strong weaknesses, because usually things that you're weak at are things that you like doing and you're not naturally good at. He goes, find people who are good at those things so you can focus on the things you're really good at. And that's what I've tried to do here, right? So for me, the marketing and public relations is part of what I'm naturally drawn to and naturally, I don't say good at, but like I enjoy doing, right? And I've been told lots of times in lots of formats that it's something we're good at and unique at. But if it's not your thing, I think it'd be hard to try to force that. You'd either have to outsource it, like I outsource IT, like I outsource compliance. But if you can't do it in an authentic voice, it will come out. It will be evident, right? Which is why I always kind of laugh about when I see advisors pushing out, hey, here's a commentary from JP Morgan Chase, or here's a commentary from Schwab or whatever. Not that there's anything wrong with those. And I love reading stuff from David Kelly and Liz Ann Saunders or whatever, right? Really smart people. But that's not who my clients hired. My clients hired me, right? And they want to know what I think and what I'm doing. So if you can't do it, you're going to have to find somebody to outsource it. But I'd say stay in your lane, stay with what you enjoy, focus there, and hire around you for the things that aren't your natural strengths.
Yeah, super smart. I was just listening earlier today to a podcast interview, and it reminded me of the book by, I think it's Gay Hendricks, called The Big Leap. Okay. And it's all about being in your zone of genius.
Yeah.
And staying in that zone of genius. So, I know what my zone of genius is, and then I need to your point, hire around me. It's the same thing for anybody who's running that business. And so, finding that is so important.
Yeah, completely agree.
This was so fantastic, Jesse. Thank you so much. Thanks for showing us that, that economics and finance does not have to be lacking in personality, and that success in our business doesn't have to be boring. So thank you so much for being here.
Well, thank you so much for having me. It was a great time and it went fast.
It did. And to our listeners, if your practice is solid, but your messaging maybe feels a little flat, if your clients are trusting you, but still kind of glazing over, maybe the answer isn't another tool. Maybe it's being more like Jesse, showing up truly as yourself. Hope you'll hear us next time. This is Advisors Off Script, a podcast and a playbook for your business. Thanks for joining us.